Hey guys, this is Nick with Nick Does DGI, and welcome to my channel, where I cover all things personal finance, stocks, and real estate. Today, I want to go over something that's flying under the media's radar, and that is margin investing. So let's get into it. With the recent news of Robinhood reducing its margin interest rate in half from 5% to 2.5%, and M1 Finance offering customers a free year of its premium service M1 Plus, effectively reducing its margin interest rate to 2%, I couldn't help but look into this further. If you guys don't know my personal investing strategy and philosophies, I consider myself a fairly conservative investor. I stick to proven dividend growth investing, and I don't trade options. However, with margin interest rates dipping so low for the foreseeable future, I had to take a deeper dive to see whether I should incorporate margin investing to compound my portfolio. And to get a better understanding of margin investing, we have to ask, what is margin? Margin is essentially the money borrowed from your brokerage firm to purchase additional securities like stocks and funds. By enabling margin, you increase your purchasing power by using the brokerage's money. The money that the brokerage is lending you is basically a loan against the cash and stocks you already hold in your account, very much like how a bank will give you a home mortgage backed against the value of your home. And you will pay a periodic interest rates based on the brokerage and indirectly off of the federal funds rate. The margin service will usually come at a premium, and various brokerages will cost different amounts. For example, Robinhood Gold is Robinhood's margin product that costs $5 a month for a 2.5% margin interest rate, whereas M1 Finance's margin product is technically M1 Borrow, where it costs $125 a year. But there are plenty of deals all year long, and I recently purchased a year's worth of M1 Borrow through the M1 Plus membership for $50 so that I can get access to the 2% margin interest rate. And another benefit to using margins from these brokerages is that approval is usually immediate, involves no paperwork, and has no impact to your credit score. But with the idea of borrowing money at historic low margin interest rates, is there a catch? Are there risks associated with taking out margin? And the answer is of course. With margin investing, you have to be aware of variable interest rates, maintenance margin, and margin calls. Interest rates. Brokerages like M1 Finance and Robinhood all set various margin interest rates based off the federal funds rate, which is the target interest rate set by the Federal Open Market Committee, at which commercial banks can borrow and lend excess reserves to each other. If the federal funds rates go up or down, brokerages will adjust their margin interest rates accordingly. But because of the economic ramifications of 2020 due to the illness, the current federal funds rate is just 2.25%, and the Fed does not anticipate increasing the rate until 2022 at the earliest. So it's expected that brokerages will be able to continue offering low 2 to 3% margin interest rates for the foreseeable future. And once you buy stocks on margin, your brokerage will set a minimum maintenance margin requirement, which represents the amount of equity you must maintain in your account to avoid being issued a maintenance margin call. A federal rule called Regulation T sets the minimum requirement at 25%, but brokerages may require a higher percentage based on perceived volatility and risk of a given company. For example, let's use this scenario listed from the M1 Finance's website. If you were to use margin on a $10,000 M1 Finance portfolio to borrow $3,500, your new account total value is now $13,500. The equity percentage would now be 74%, or $10,000 out of $13,500. And now let's assume all your positions in this account require a 30% maintenance margin requirement. If the market crashes and takes a turn for the worse, and your equity now makes up less than 30% of your overall account value, a maintenance margin call will be issued. A number of reasons can cause your portfolio value to fall below your margin maintenance requirement. A margin call is a brokerage's official demand that you either deposit additional money or invest in securities into the account so that it once again meets the minimum maintenance margin requirement, or alternatively, if you cannot muster up the additional money, the brokerage can and often will force you to sell existing securities to resolve the margin call. Now, how would I apply margin to my own portfolio and investing strategy? I have thought this through for a while, and here's what I'm thinking. Because I am now a M1 Plus member, I will soon have access to M1 Borrow once my portfolio reaches the minimum required amount of $10,000. Once I unlock M1 Borrow, I'll be able to take out margin on up to 35% of my portfolio value at a just 2% margin interest rate. And all my positions in the Nick Does DJI portfolio only require a 25% maintenance margin requirement. So I'm also inclined to not take out the entire 35% at once because I want to leave a considerable amount as my quote-unquote dry powder for when we see a substantial market decline. If I take out maybe half at $17.50 in margin, the interest payment will amount to just $35 a year or $2.92 a month. And since the market will average on return 8% a year in addition to any dividends received, I will be net positive on taking out margin. I don't intend to invest in riskier growth or IPO stocks and stick to dividend growth investing stocks that will continue to grow its dividend year after year. Please note that this video is not intended to be a comprehensive video on margin. This video is not financial advice and I'm not your financial advisor. So please do your own research and due diligence if you decide that margin is for you. And I hope you found value out of this video. Comment down below, and if you are thinking about using margin. If you enjoyed the content, please consider subscribing to the channel, clicking on the bell notification to receive all the latest video alerts. Bye.